Good morning, everybody. Mike Vacchi, PrincetonTrader.com, here for NTMarkets.com with your Friday morning pre-market webcast. Okay, S&P 500 E-mini futures daily chart, and just the third crazy day in a row. I was saying to my members, it's a very rare day where both the bulls and the bears can be so right and so wrong on one day. Yesterday in the morning, the bears completely blew it. They took it all the way back to the middle band. Middle band held, and the bears owned the afternoon, and the bulls blew it at a key area. And now what we're seeing today is what we were looking to see from the bears yesterday, which was some follow through. Okay? Here's a 15-minute chart. And we get into yesterday at the open. 2035 resistance was important. We talked about that. The bears drop the ball when they break over 35. They take it all the way up to, at that time, the middle band was a little higher. And it held as resistance, which is a big moment for the bears. They've blown so many of these moments before. So to be sitting on the first touch of the middle band at 10:30 in the morning, basically with a whole day left ahead of them, we've seen the bulls really ram that setup home so many times where they just take another 10 handles, 15 handles, run the bears right out of town. This time it didn't happen. This time it held. It's a combination of the middle band and the 9-day simple moving average, and they were able to reverse it. The 2045 area has been important. It was important on Wednesday as a fail point. So when the bears were able to break 45 and take it down to 35, wasn't surprised. When we went from 35 back to 45 and confirmed 45 as resistance again, that was the point where the bulls really blew it. And at that point, we went straight down to the close. We've seen follow through overnight. There's some adjustment here, about 7 handles worth for the March contract. But the key element now is that this 2020 to 2021 floor was now, as a result of the rollout, we saw a break of the 13 to 14 floor. 2021 floor becomes the 13 to 14 floor. We made lows at 2009 half. So the issue becomes now that we're below the lower band on the continuation chart. The issue becomes now is, can 28 hold? It hasn't been threatened overnight. 28 is a big area for me because it's an adjustment of the 35. 28 becomes a big area. The lower band obviously is a big area. And as we go out here onto the daily chart in the March contract, you can see that the low today is right at the area of the red line, the 50-day exponential moving average on the March contract. And that we've started the third day of a lower band ride there as well, and you can see the band starting to expand out. So the bears, the bears have some potential. This is a zoomed-in daily chart. Ugly candle, 9-day simple moving average supports, now resistance. That was confirmed yesterday. It held again. That 13-15 floor has been broken. Third day of a band ride, band's expanding. And it's the same thing I've been saying for 3 days. The bears have set themselves up for a great down move. They just need to follow through. They need to follow through. They need to hold 28 and follow through lower. The bulls want to get above 28 and get back to work on that 45-50 monthly pivot. But you start to get the feeling that yesterday was really their day to do it. They had it. It was done, and they let it slip through their fingers. So it's advantage bears this morning. Okay, everybody have a great day. Follow us on Twitter at Princeton Trader. Check out the website, princetontrader.com. Come check out the chat room. I'll be back Monday morning with another webcast. Have a great weekend. Trade 'em well, everybody.